Welcome, and thank you for tuning in to ESG Talks, a KBRA podcast series focusing on environmental, social, and governance, ESG. This podcast series highlights various ESG hot topics and includes commentary from prominent voices within the ESG community. In this episode, I speak with Gordon Kerr, KBRA's Head of European Research, and Karim Nassif, a Senior Director on our European Project Finance and Infrastructure team. We talk through a research piece we recently published providing an overview of the European Green Deal Industrial Plan. This piece is the second report in our series covering ESG regulatory updates in the EU. Our previous research piece covered the European Green Deal, and we also have a corresponding podcast that I would encourage you to listen to. Gordon, Karim, and I discussed the main policy proposals under the European Green Deal Industrial Plan, which are the Net Zero Industry Act, the European Hydrogen Bank, the Critical Raw Materials Act, and the reform of the electricity market design. We also discussed the potential credit implications and the practical challenges of the EU's proposed plans. Thank you, Gordon and Karim, for chatting with me today. I'd like to set the scene and give a little bit of background information before we dive into the details of the specific EU policy proposals we'll be covering in this episode. So in February 2023, the European Commission announced the Green Deal Industrial Plan, which aims to accelerate the region's 2050 net zero emissions target by scaling up the EU's manufacturing capacity for net zero technology and products. So EU officials wanted to create a more level playing field in the region and maintain the global competitiveness of the EU's green industries in recognition of the global clean tech race that is happening right now, with large investments being made by the US, China, Japan, India, and others. The move was largely a reaction to the US Inflation Reduction Act, the IRA, which was passed in August 2022. And this was really the largest amount of American climate spending to date. In tandem with deficit reduction plans to fight inflation, the IRA included significant investments to accelerate clean energy deployment, spur green technology such as carbon capture and storage, increase clean energy jobs, and improve energy security. So the $370 billion US bill expanded access to loans, tax credits, and grants for renewable energy and clean technology across the US. And then shortly after its passage, the EU, along with other US trading partners, said provisions in the IRA broke global trade rules under the World Trade Organization, since certain provisions require manufacturing only in the US. So now let's turn to the European Green Deal Industrial Plan. So Gordon, I want to kind of turn over to you for the specifics of the EU's legislative package. Can you really talk us through the overarching goals?
Thank you very much, Emily, for having me on again. Yeah, the European plan has four core policy pillars: faster access to funding, an enhancement of clean technology skills, open trade for resilient supply chains, and a predictable and simplified regulatory environment. To speed up the process for funding for clean technology investment in Europe, the European Commission amended the temporary state aid crisis and transition framework to enhance and expand member state funding access. The European Commission also amended the general block exemption regulation for member states to more easily access funding in specific sectors that support the goals of the Green Deal Industrial Plan. The Commission plans to develop a European sovereignty fund that would help to facilitate investment in green industrial activities. And the plan also includes a proposal for the Net Zero Industry Academies that will help to expand and enhance skill development in strategic industries. The rest of the plan is focused on creating a more predictable policy framework to help develop green industries within Europe.
Exactly. So thank you for that, Gordon. In March 2023, the EC announced a few policy proposals under the umbrella of the Green Deal Industrial Plan to, as you mentioned, ensure a more predictable policy framework. This included the Net Zero Industry Act, the European Hydrogen Bank, the Critical Raw Materials Act, and the reform of the electricity market design. So Gordon, I thought you and I could talk through these proposals. And then Karim, I want to turn it over to you to discuss the practical challenges and credit implications associated with these proposals. So I'll start with the Net Zero Industry Act, which aims to scale up European net zero manufacturing and creates a strategic goal of increasing domestic net zero technology production to meet 40% of demand by 2030. The Act categorizes 8 strategic net zero technologies, which are solar photovoltaic and solar thermal technologies, onshore wind and offshore renewable energy, batteries and storage, heat pumps and geothermal energy, electrolyzers and fuel cells, biogas and biomethane, carbon capture and storage, and grid technologies. And grid technologies includes electric vehicles, as well as smart and fast charging. So the Act proposes to streamline regulatory and permitting procedures and set time limits on the permitting grant processes for what the EU is calling net zero strategic projects. It also specifically aims to accelerate projects in the carbon capture and storage space, setting a goal of 50 metric tons of annual CO2 storage capacity in the EU by 2030. The Act includes specific proposals at the member state level as well, including a provision to set up regulatory sandboxes that establish a more flexible regulatory environment to test new green technologies. Gordon, can you talk us through the proposal for the European Hydrogen Bank?
Yeah, sure, Emily. The EU sees the scaling up of regional hydrogen production as a key strategic move in the global green technology race and energy security. The bank's mission will be to create a domestic hydrogen market and enhance hydrogen imports into the EU by contributing to early market creation and expanding the role of the private sector. The European Commission is moving quickly on this goal and is aiming for the bank to be operational by the end of 2023. Under the EU Innovation Fund, the Commission is working to implement a hydrogen auction system, which will subsidize hydrogen production through a fixed premium per kilogram of hydrogen produced over a maximum of 10 years. The European Commission is currently drafting the design of the auction program and will be holding the final workshop in May 2023.
Great. And then the third piece of proposed legislation is the Critical Raw Materials Act that will ensure the EU has access to the critical raw materials necessary to meet the region's net zero targets. The Act categorizes both strategic raw materials, SRMs, and critical raw materials, CRMs, which include things like copper, battery-grade nickel, cobalt, and lithium, among others. It outlines specific benchmarks for the EU to meet by 2030 to scale up domestic capacity in SRM supply chains, and the Act would also simplify and streamline the permitting process for raw materials in the EU. The last piece, Gordon, which is likely to have the most relevance to credit, is the reform of the electricity market design. Can you give us an overview of that piece of legislation?
Yeah, this reform aims to accelerate the shift from fossil fuels to renewables in Europe's electricity system and make consumer bills less dependent on price volatility in the oil and gas market, as we have seen over the past year and a half. The European Commission notes that the reform will likely prompt changes to existing pieces of legislation, including the electricity regulation, the electricity directive, and the regulation on wholesale energy market integrity and transparency regulation. The proposal would incentivize longer-term contracts with clean energy production to expand access to affordable, renewable electricity. It would also enable the Agency for the Cooperation of Energy Regulators, ACER, and member state regulators to better monitor the energy market and enhance transparency.
Thanks for that, Gordon. So now we have the basics of the EU Green Industrial Plan. So Kareem, I want to turn it over to you to really get into the details of some of the challenges and credit implications of the plan. So let's start with, what are the main credit implications?
As you said, Emily, the most important and immediate impact emanates from the electricity market reform plans, in our view. If implemented in a manner that leads to a decoupling of gas from electricity, this could have repercussions across utilities and producers, such as renewable projects, integrated utilities, and distribution and supply companies. From a credit standpoint, it still remains unclear what financing structures will ultimately emerge, and much, in our view, will depend on the regulatory framework that will support such technologies. For example, in other project finance initiatives, there's been subsidy-based schemes, such as, for example, contracts for difference or regulated asset-based subsidies, or retail initiatives such as feed-in tariffs. Regulatory frameworks and contractual underpinnings will need to be identified and developed to support revenue profiles and allow viable funding structures. Until then, the private sector may remain guarded in terms of support and direct involvement in the stated green targets. The risk is that without the industry engagement and support, it may stunt the growth and ambitions of the plan.
That's really helpful, Karim. Can you also talk through some of the other challenges of the EU's plan?
Yes. I'll give an overview of the challenges we foresee, but I would encourage listeners to read the corresponding research piece to get a bit more of a detailed explanation on each of these. Any effective implementation, in our view, may need to consider the potential to crowd out private finance. EU funding through bodies such as the European Sovereignty Fund and the European Hydrogen Bank is important and positive, but over time, it will be critical to bring private sponsors and funding to support these initiatives. It's important in the long run that these newly developed value chains are sustainable in their own right and over the long term. The other potential challenge that may rise is competition between member states. However, the relaxed rules may also create an opportunity for smaller nations to support the external expansion of local companies. While supportive of the end goal, the dynamic does risk a government-funded competition for resources. In establishing targets for certain technologies, the EU will need to recognize certain deficiencies that cannot be circumvented through legislation or regulatory reform, such as resource shortages for things like battery storage and decoupling electricity prices from the cost of natural gas. The last thing I did want to mention is the importance for the EU of maintaining a flexible approach in terms of identifying key technologies that are critical towards the net zero path, as well as in how it allocates strategic priorities. There have been examples of technologies that at first may seem promising, but prove to be impractical. An important difference between the US IRA and the EU Green Industrial Plan is that the former is technology agnostic, and in implementation, it will be important for the EU to reconcile this in implementation.
Thanks, Gordon and Karim, for coming on to chat with me today. Hopefully this has been a helpful overview of the EU Green Deal Industrial Plan for our listeners. I think it's important to say that a full understanding of the credit implications will take time to emerge as the legislation is enacted and market participants react to the opportunities and challenges these policies create. As the EU continues to expand and refine environmental-focused policies, KBRA will continue to monitor the effect on credit across KBRA-rated sectors. So thanks again for joining me, and hopefully this was a helpful episode for our listeners. This concludes our episode. Please email esg@kbra.com with any questions or comments. We also encourage you to visit KBRA's ESG website at esg.kbra.com, where you can find ESG research related to the topics discussed in this episode, further details on KBRA's ESG approach, and other ESG-related media items. You can also join our mailing list to access our ESG Weekly Roundup newsletter.